but the market doesn't like me. We broke structure. We should be buying, right? I'm just gonna go ahead and load up on my buys here, right? We broke structure. It's not that the market doesn't like you, it's just you're on the wrong side of the market. That's what's most likely happening here, and you just burn this into your head. Always know where you are on the higher time frame, understand where liquidity is, and know what the higher time frame is doing. And that's it. Hey, what's up? I hope everyone's having a good day, and let's get right into this. So I wanted to thank everyone for all the views and all the support that I got on Market Structure 1.0. A lot of positive feedback. It's actually the highest viewed video on my channel, 990 views as of this recording. So there's been a lot of demand to make Market Structure 2.0. So I'm actually going to go ahead and make this video. It will be shorter than 1.0, but still very, very interesting concepts. If you haven't done so, please watch Market Structure 1.0, since we will be building on top of concepts taught in that video. So without further ado, let's get right into it. Okay, so let's get right into this. So Market Structure 2.0 is really going to focus on intermediate structure and time frame correlation, so you can do multi-time frame analysis. And this was personally a really big game changer for me in my personal trading. So hopefully this video can act as that for you guys. But we're gonna quickly draw an uptrend. It's gonna be an uptrend just because I'm a better buyer than I am a seller in terms of historic performance. But this is a uptrend on a daily time frame. Sorry, let's stretch this out. Let's have some fun with this. Okay, go here, and this will all make a lot of sense very, very soon. Go here, you go here. I look like a madman. You go here, you go here. So this is a daily time frame, right? Well, just excuse the rigidity of price here, but this is a daily time frame for this example. And this concept here may be a shocker for some. It was a shocker for many people when I showed it to them, but this is very, very important. On the daily, you can say just by looking at this, and once again, make sure you watched Market Structure 1.0 before watching this video. But just looking at it, you can most likely tell that price is in an uptrend, right? We're making highs and we're making lows. We're making higher highs and higher lows, right? So that's what qualifies as an uptrend. So what many people fail to make this connection with is that while this is happening, there are other time frames, right? This is how the fractal market works. There are other time frames that are on their own thing as well. So when price gets up to this point, this is very, very interesting, because once again, this really changed my trading. And if I could hammer this in at least one person, then this video is a success, right? So based on Market Structure 1.0, what did I teach happens when price comes down here, right? We have a break of structure, right? And price will start flowing, and red is H1, right? So keep this in mind. And this is what real trading, looks like, right? You need to know points. And I'm yelling at you guys, typing in all caps just to make sure that you guys really understand this. Always know where you are in price action. Know what the HTF, just higher time frame, is doing. And be aware of where liquidity. I have issues typing while I'm being recorded, but these are the points, right? Always know where you are in price action and know what the higher time frame is doing, and be aware of where liquidity lies. So as price has this break of structure, what you'll notice is, I myself will get involved in these shorts. Now, keep in mind, once again, black, and let me write this down just to make sure everyone's on the same page. Black, daily, white. There's no white. H1, or just any lower time frame in general, right? So on the daily time frame, we're maintaining this overall, bullish structure, but But at the same time, how is it possible for H1 to break? Well, H1 is breaking to get liquidity. Where's liquidity? In this case, let's just say you have an imbalance over here. So price is being drawn towards that imbalance, and you can actually capitalize by taking these shorts. But the very, very important part here is do not get married to these shorts, right? And none of this is financial advice, but this is all from my experience, and this is how I trade, right? So you cannot afford to get married to these shorts, because eventually price will revert back to its normal trend. So I already have NAS 100 pulled up, so let me give you guys a live example. So let's say looking at NAS, most likely people would say that NAS is overall bearish, right? Notice how we're breaking these lows. So price made a high here, made a low, broke the low, so we can say that the swing point is from up here to down here. Now, what do we notice? At the top point, we have supply. What is supply? Liquidity. What did I mention down here? Be aware of where liquidity lies, right? So now we understand that the overall swing point in this market is from here, swing high right here, swing low right down here. So as price goes up into liquidity, you will get those breaks on a lower time frame. This is what the lower time frame will look like, and you can tell without even having to look there. The lower time frames will start having bullish breaks, and then you can take advantage of those. But overall, in the back of your mind, you need to be aware of where you are on a higher time frame, because now when we go to the 1 hour, and I can actually break down one of my trades from last week, and I can break down a little bit of the one from yesterday. I may give it its own video. But we understand the liquidity is in this purple zone here. So on the 1 hour, what we'll notice, and the chart will be a bit messy, but what we'll notice is that this low got taken out, validating this as structure, also known as a lower high. So as price breaks this, we just had a break of structure, right? Break one. I like to wait for 2 breaks personally, so you get your second break here. After you get that second break, you can start to play these zones and look to get involved into longs. Going into where? Where's your target? Overall target is this level of supply, because we understand where liquidity lies. Now, as price goes up into said level of supply and we start getting breakdowns in price, if you want to look at just really this low here, right? Notice how price has been getting displaced since up here, and notice all these lows getting liquidated. What do we notice now? And this is really crazy, because this is how fractal the market is. This happens on every single time frame, every single day, every single second of the day even. So the swing point in this case will be from up here to down here. And once again, price does not have to come up here, right? It does not have to. Price can just do this and keep breaking down. However, as price makes its way to some sort of liquidity, be it this vacuum block here, be it the imbalance over here, the imbalance over here, price will have breaks on lower time frames. And let me show you guys. So let's say this happened here. If you go to a 5 minute, hopefully it's available, wonderful. If you go to a 5 minute, notice how we're starting to have bullish breaks to the upside. And once again, in the drawing, I showed you guys the daily time frame versus the 1 hour. But now in this case, the 1 hour would serve as the higher time frame, and the 5 minute would serve as the lower time frame, right? So we understand overall liquidity in this case up here in this level of supply. Now, if you choose so, you can start to get involved on these breaks of structure to take it up here. Now, this is all personal preference. For me, I would not be doing this if the higher time frame is the 1 hour, right? Because nothing says price has to come up here. It's nice when that happens, but understand overall that price does not have to go all the way to your zone every single time. And here's some free sauce, by the way. If you've been trading for some time, or if you haven't, you'll notice that the market has been shifting, right? The way the market is moving now is not how it was moving a year ago or even 2 years ago. Because this is very interesting. The way we trade, right? Or the way I trade anyway, price will give you a break of structure, and we have some sort of liquidity down here. What you'll notice as time goes is that you're not getting this, right? Price is not always pulling back as deep as it used to. This is where you have to be versatile and adaptable in your trading. You have to understand, okay, if price is not pulling back all the way here, I need to have other strategy, not necessarily another strategy, but I need to have methodology for what to do if price does not come down here. Because yeah, you can wait, and eventually you could say price will give you a pullback to one zone. This is one way to go about it. Or just have another type of understanding more types of liquidity can get filled here, as opposed to always going to the zone here. But that's a lot of sauce right there if you know what to do. But let's say price does not always have to come up here, but in this case the 5-minute function is a lower time frame. You can look to get involved. If you really want to take another step, boom, break a structure, break a structure. Where's the zone? Right here, price broke. Right here, order block right here. Right? Buy right here, stop loss over here. Where are we going? Liquidity. Right? That's simple. Liquidity. Wait. Okay, liquidity gets hit. What happens now? And I actually took a trade in this area, so you guys can actually see this. What happens now? Price gets into liquidity. We wait. Price gets into my overall zone, and I start denoting breaks of structure. I'm sorry, I really don't want this to turn into a trade breakdown video, but this is really important to know where you are at all times. So as price grabs liquidity from here and starts having breaks to the downside, I'm actually able to get involved on a trade here, understanding that overall we are short. Where is price going? Surprise, surprise, price is going to liquidity. Liquidity is grabbed, price is moving to the downside. You can actually get involved on a trade like this. Caught a 1 to 5 on this trade. And yeah, it was a very, very nice trade. And I actually took another trade similar like this yesterday. This is going to get really repetitive, but the more repetitive it is, hopefully the better it is for you guys. So over here, this was the purple zone. Price broke down. 4 hour. Okay, 4 hour broke structure over here. We had a shift to the downside. Where's liquidity? Liquidity is up here. Liquidity is over here. If you want to play off of this breaker block, if you want to call it a mitigation block as well, it is that. So we have overall mitigation block here, overall breaker block here. So price comes back. Most likely, we understand that. Once again, this is a lot of sauce, right? I really cannot, you guys really need to make sure you're paying attention here. We understand that lately, as the market tends to shift, we are not getting pullbacks as deep as we used to, right? This is not to say that this does not happen at all, because you'll still see it, but not as much. So we understand chances are that this liquidity here will take precedence over the liquidity up here, and we have different types of methodology to get involved. But anyway, we have this level here on a 15-minute, right? It's just going to be a 15-minute level of supply. I understand that there's a high probability that price will come over here. Now, after you understand that, what happens? Price starts to shift again. Break a structure right here, break a structure right here, and you can start to go long in anticipation of price clearing this liquidity, then reverting back to that overall move. So understanding that, price pulled back, 20-minute OB, was able to get involved. And the important part of this trade is how it was managed, because we are not overall bullish here, right? So normally, I always teach you guys, target the liquidity, target the highs. Why did I not target a high here? Because we're not bullish. Why would you target a high? You need to know what's going on in the market on multiple time frames. Multi-time frame analysis, time frame correlation is very, very important. So we understand overall we're short. We had a temporary shift to do what? To grab liquidity, right? We grab liquidity from this level here. After grabbing said liquidity, the market then has more motive to go down, and potentially where this is the target, the sell side liquidity at 10,596.90, right? That is where the liquidity lies for NAS 100 right now with this overall bearish move, and that's where I will personally be targeting my trade. And this is not financial advice, but overall understanding where we are in terms of multi-time frame analysis. So we're going to give you guys a quick summary, and this video will be shorter than normal, so that's good. So once again, we understand that this is how the market will be moving on a lower time frame. And on a lower time frame, you will get 100% of a structure break. So this is a real structure break, but you must not get married to this, right? Because if you were overall bearish on this market, your overall target would be here for the short. So you'd get in for a short. Wrong one, sorry. You'll get in for a short. Target here, but we understand we're overall bullish. So we'll actually be more willing to take profit and get ready for price to actually start going back. Same thing happens, right? Market is fractal. This happens on every single time frame, every single second of the day. This is always happening. So the main points, once again, of market structure 2.0 is make sure that you know where you are in price action. Multi-time frame analysis is key. Analysis is key. Right? All of this shows do not get lost in these ranges. Once again, I've said this before, but would you really prefer the 30 pips over the 300 pips? Now, both will still pay you. Money will still hit your bank account. However, going with the overall move where you can actually get higher targets works a lot, and you can also take these moves, because you guys have seen me take this moves. How many trade breakdowns are there on my channel of me actually playing this lower time frame, but understanding where the higher time frame is? A lot of videos are like that. I can't show you, but I have like videos in my SSD of trade breakdowns. I just don't release every single video, but everything is the same. So overall, once again, I'm going to go ahead and end the video here, but I hope this was very, very beneficial for a lot of people. Understand where you are in terms of the grand scheme of things, even the monthly. I've looked at monthly charts and all of that. You want to understand where liquidity lies. Where does the monthly want to go? Where does the weekly want to go? What did the weekly do? That's very clean. What did the weekly do? Right, just formed a new low. What's the target? For the low to get taken out, right? We're going for the daily target and then the weekly target at 10,431.70. So I'm going to go ahead and end this here. I hope this was a very, very beneficial video for everyone. And if you have any questions, you can reach out on Instagram at KingOmarD. Personal page, business page here, Olympus Enterprises, and KOD Trader Manager. It's my algo that I use to run every single one of my trades, to partial out, move to break even, and close positions. And yeah, I'm gonna leave that here. And once again, thank you for all of the all of the positive feedback and everything for this video here. And I hope this one can serve as, better than this video here. But without further ado, peace out.